Hello, everyone. This is Willie, and we're again on the Budget Investor. This is the fourth installment in my financial update series, and we're just providing some background to where I was and how I got here today. 2020 is the year in review, and let's get into it. What a stellar year it was. When I first set off on my journey, I prepared myself for some slow years to start off with. At the time, our economy had been running red hot, so it was the conservative accountant in me that I think helped me set this mindset and prepare myself, for some tough years at the start. But the reality was 2020 was a very good year to me. It grew on the previous years. I grew my asset base by almost 20% and continued to reduce my overall debt. This saw me almost triple my net worth in just the year. To give some context, in this year I earned about $80,000 before tax, which is about $62,000 after you take tax off. So I would have received about $62,000 of cash into my bank account. Now, of course, normally I would still have all my regular living expenses to pay for as well. But thanks to the investments that I had invested in prior years, including this year, I had managed to increase my net worth by around $62,000 as well. So it had the same effect to my net worth as if I had just started the year with nothing and I had collected my paycheck for one entire year. And in my life, I did not have to pay for anything. So I kept all of my paycheck. That was kind of the end result of 2020. And yeah, it goes without saying, but I was so stoked with this outcome. It was a very up and down year, and the end result was just amazing, really. So let's look at what happened. It certainly wasn't a boring year of being frugal and saving every penny that I could. The start of the year saw me again. I took a 1 month holiday with my partner and we traveled in Southeast Asia just to get some, R&R in and go meet her family as well. Notably, not long after that, the COVID-19 pandemic also hit globally, became a global threat later in March. And this saw markets around the world first shrink rapidly. In about 1 month's time, they were down in the double digits. But by the next month, a lot of markets had recovered or near recovered. And then over the next 6 months after that, they had expanded greatly at, in the double digits from where they were at the start of the year. So because I had started off my journey, I had my KiwiSaver and I was investing in sharesies and I had some alternative assets in cryptocurrency, saw a large amount of growth in these areas over the year. During this time, I took the opportunity to cash in some of the stocks and shares that had performed very well. But I also continue to buy and invest in other stocks and shares and further my learning and development in this area. Also, in the year, me and my partner settled on purchasing a family home for Nanai and Lola, and that's mother and grandmother in Filipino for you all. So as you can see, it was a very eventful year. There was a lot going on in my personal expenses and my investments and just generally how the situation globally, it was a wild roller coaster. And like I said, the end result was just remarkable and I was very happy with it. So let's actually take a look at how this was reflected in the details. Notably, my house asset has grown significantly, as well as the KiwiSaver and crypto assets also grew by a lot. I only contributed a small amount towards my partner's house, and because of this, I recorded it as a small loan in my numbers instead of, perhaps recording a share of an additional house and mortgage. I took this as a more conservative approach, as I've lent a small amount of money, and I'll probably get that back in the future in one way or another. And if if I had, it's definitely a conservative approach, because if I had, just like my house, if I had recorded a share of what her house value was in my books, it went through just as much significant value growth as mine did. But like I said, I have taken a conservative approach here and basically just recorded a small amount of money that I lent out. I also continue to reduce my mortgage and student loan debts. However, you might notice that my consumer debts really did blow out in this year. I was kind of not paying down this debt and putting my money towards other investments for the future rather than, just paying down this debt. I was okay with it at the time, but as this number is blowing up, I think I'm going to soon have to start dealing with this in 2021. So, is it time to pop the champagne bottles yet? No, not quite. If I look back at my original goals I set myself, I wanted to increase my net worth to 100k when I'm 30, so before I'm 31, and you can see that goal down there at the bottom of the screen. Like I've explained before though, at the time I was looking at my net worth excluding my student loan, and if I did that, I am over the $100,000. The theory was, just if I stopped there on that day and never earned a cent more and was able to cash everything up and just have it, I wouldn't be paying back that student loan. But this is an overly simplistic idea, and I really just track this number as sort of a nice to know sort of thing. But in reality, I plan to continue to work and generate income, so I'll always have to pay this back. And in that case, my net worth is still, below the $1,000. So as you can see here, excluding the student loan, I had $111,000 of other assets and liabilities that had gone out and incurred. However, I've got to take the student loan into account. I will be paying it off in the future. My real number is only $97,000, so I'm not quite there yet. However, with this being so close to the goal and a fair few months left, I'm more than confident that I'll be popping the champagne bottle sometime soon in the future. So I hope to see you there too. In the meantime, if you enjoy this, give it a like, subscribe, share, or leave a comment saying hi, if you will. And I will see you soon as we head on into 2021. Let's pop that champagne.